Hello traders, Gary Wagner here, approximately 10 o'clock in Honolulu, 3 o'clock in New York on Friday, the last day of the month in terms of trading, the 30th day of March. And this is the daily report, our weekend review for Friday. We do have a stronger finish in the precious metals markets as we look at them this morning, and they get ready to close in just a little bit. In terms of the marketplace itself, we currently have gold up about $7 on the day. As you can see, our current print is 1668.70. That's the cash market. When we look at the June contract of gold, that's currently 1671.90. Silver up about 6 cents on the day, 32.42 to 32.48 bid-ask spread. Platinum up $11, palladium up $5. On today's report, of course, we will review the week and talk about our strategy for next week and where we think this current rally might take the precious metals to in terms of price, all here on today's daily report. Now, in terms of the precious metals market, specifically gold and silver, the two charts I want to start off with are going to be our weekly charts in both gold and silver, and they'll be off of the New York market. And what we can see here, this first is our weekly chart. This is June gold, and simple candlestick chart. Couple things come to your attention immediately. First of all, when we look at this last rally, we have put a Fibonacci retracement of 61%. As you can see, looking at the market 2 weeks after this low was reached, we can say that it absolutely appears as though gold has found real good support. That support 1627, that of course spaces June gold. And the other thing that I'm noticing in terms of a straight candlestick pattern, you have this long red line. This is where we made our low, right in here. You get this doji candle almost in a star position, and then for it to be what is called a three-river morning star, you would really have liked to have seen this particular candle here a lot larger. It was not. And what we're getting on a weekly chart is really a sign of a key reversal and consolidation within the marketplace itself. Traders, this is our weekly chart. This is of May silver. Again, this is the New York markets. And we have a very, very similar scenario in terms of the retracement. This is a 61% retracement. And of course, I'm drawing it from this last rally here. And as you can see, this market came down a couple of weeks ago, hit this bottom being at around 30.58. That is why our stops are below 30.52, because this is where I'm showing really strong underlying support for the marketplace itself. Gives us support right in here. Of course, on our silver position, what we did is we did purchase as this market was going up. It came down a little bit against us, and we dollar cost average. And so currently, our average price of silver is right around 32.50. So just about where the market seems as though it wants to close. We're sitting with a position in our silver. In terms of gold, our average buy-in price is 16.50, and as I said, 1671 in New York, 1668 in the spot or cash market. The next chart that I do want to take a look at is going to be a gold chart. We have been looking at this all week, of course. This is a 360-minute chart. This is currently in Henkin format. Let me see if I can't get those candles a little bit bigger for us. And it's a Japanese average. Now, there's a couple of things that are quite apparent within the market, and we'll just spend a couple of moments with that. But when we take a look at really how this market has been trading, this, of course, at 360 gives us a lot more candles. This is that rally that we have been looking at in terms of the market moving from about 1520 up to almost 1800. We can see that the market retraced quite eloquently to our 61% retracement level. That's right in here. But this is what's more apparent. In a 360 chart and in Henkin format, it becomes very, very clear when the market's trending or consolidating or range bound itself. And what I mean by that is when we take a look at our count, 1, I have 2 here. You can see we can put it in a number of places here or here, but we're fixing this as our low. 3, 4, and 5. You can see that during these corrective times, you're getting a very, very choppy market in terms of it being range bound, and it's typically forming a flag, not a flag, but a triangle correction or formation, and then you get a large breakout to the upside both here and here. Now, how that differs is when we look at this correction in here, you can see solid red all the way down, A, solid green, B, solid red, C. Little bit choppy in here for our D and our E, but that would absolutely conclude the corrective period or terminate this intermediate 2. And realize that within this intermediate 2, we're just coming off of a major 4, and right now we're in our major 5th wave. So this is a strong rally that should develop in this marketplace. So what did we get? Well, we got our first A, which came a little bit short of where we thought it would go. It didn't go to 50 or 75%. Very solid 2, and it's my current belief that we are now in a minor 3 of an intermediate 3, all found within a major 5th wave. Traders, we are currently looking at a Henkin Ashi chart, 360, and this is of the silver market. This, of course, is spot silver. We have our top here at 37. 1, 2, 3, 4. Our 5 count down. This terminates our correction. 1, 2, currently in 3. As you can see, the market's softening a little bit, about 32.18 as we currently look at the market. Other markets of interest for us this week, Standard & Poor's 500, of course, the Dow. You can see we've seen a nice rebound back over 1,400 on the day itself. When we convert it into a weekly chart, it will give us a pretty strong indication of the kind of rally that we have seen within the equities markets when you consider where this market's moved and the tact or the angle in which it's moving up. You've got this very, very strong channel right in here, and this market has been really strong. Most importantly, when we take a look at this former top right in here, you can see that over the last 3 weeks, it has certainly exceeded that. And of course, traders, a lot of it has to do with the way the oil market is trading right now. As you can see, we are currently looking at the May contract of crude oil, and you can see 103 per barrel. Weekly chart, quite a drop when we consider that it was trading roughly at around 107 a barrel beginning of the week, and it's come in and filled this gap here. Traders, we still on a technical basis have another gap for it to fill, which is right in this area, which would take it back to around 100. My personal sense is that we'll find very, very strong support in the marketplace at $100 a barrel on the crude oil market. And for the last chart that we will look at for today's show, our weekly review, it is the dollar index June contract. And what is interesting is John Nadler wrote an article in Kitco, and they interviewed him on Bloomberg and asked him where he thought gold was going, and he said wherever the dollar doesn't. I thought it was a unique way to put it, but as you can see, dollar under pressure on a weekly basis, over the last 3 weeks. In terms of support area on a technical basis, you've got to look at these bottom areas right in here. That's right around 78.50. See if that kind of area can hold. Of course, this top here was former resistance. It was taken out here when the market went and surpassed 82. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you on Monday for another daily update and review. Bye-bye.